But let's also understand then what the outlook is on the MFI industry, what the second wave impact is potentially going to have. Does it mean more NPAs for the MFI sector? As well as what the outlook is when it comes to the sustainability of MFIs, whether or not stress can likely hamper the long-term outlook. So to discuss that in greater detail, joining in on the show, we have with us Mr. Bhargav Dasgupta of ICICI coming to that, we have Dr. Alok Misra as well, who's joining in from MFIN, as well as Udaya Kumar, who's the MD and CEO at CreditAccess Grameen. Apologies for that. Let's delve into the discussion. Thank you so much for taking time out, Dr. Misra. Just looking at the current market dynamics, it's estimated that the asset quality pressures for the MFI industry are likely to persist and continue due to the second wave and the recent surge that we've seen in cases. How are you viewing the space as a whole?
Well, thanks. Considering the experience gained in the first wave, I think the MFIs are more well prepared in connecting to their customers through digitally. But we do not know that how long the wave will persist. We are hoping that the wave will die down sooner. So if it happens by April or say mid-May, and the liquidity continues to flow in the sector, because that is a very critical point, because even in the last pandemic, the Reserve Bank of India kept the liquidity support on, though it didn't reach the small and medium MFIs as it should. But in the current pandemic also, if the liquidity from bankers continues to flow in, I don't think there would be any abnormal stress other than what we have seen in the past year.
Okay, fair enough. Coming to you then, Mr. Kumar, just wanted to understand what the outlook is, particularly for Maharashtra. That is topping the cases for the second wave, forming nearly 7% of the total MFI industry, if I'm not wrong. How is the collection efficiency? What is the trend that you're seeing in the state of Maharashtra? And more importantly, what has consumer behavior been like as well?
Yeah, happy to be here, actually. See, in Maharashtra, while it is the only 7% of the microfinance industry is there, whereas Maharashtra, there is a rule is very clear where microfinances are treated as essential services today. So that, there is a clear-cut policy where it allows you to do a business. Whereas we have little difficulty in Madhya Pradesh and Chhattisgarh where we are not very sure. Some districts have their own policies. So that is where the gap, actually, where we have a proper regulation, proper rule, proper policy, actually we not have challenges. So in Maharashtra particularly, we don't see too much of issues. Yes, there was issue because of the prolonged lockdown during the COVID earlier, which had a higher delinquency compared to other states. But this specific COVID-2 may not give additional too much delinquencies. Okay, those who have difficulty obviously may not be able to pay in this pandemic. The collection of the earlier may delay further or may not happen, but new delinquency, we don't see too much issues. And in microfinance all the time, the temporary lockdown, temporary stop of business will not impact the customer because close to 80% of microfinance customers are in essential businesses and their work is going on. So on their sales, their collections, their businesses, products, everything is going on. And microfinance is allowed to operate, so which is very positive for the industry in Maharashtra.
Now, Mr. Misra, the income of some of the micro loan borrowers has still not recovered back to pre-COVID levels in majority of the states. Which are the states, according to you, that have been the most hit? And do you think you can share some sort of data that you may have on the collection efficiency in the top states?
Yeah, the collection efficiency across India, if we look at the March figures, is hovering around 93-92%, which is not ideal as per microfinance, but still much better compared to all other financial asset classes. And when you talk about particular states where there is a problem, the problem states are there, which I will list to you, but they are not due to COVID. They are due to some other extraneous reasons. If we dissect the COVID-related issues, it is difficult to isolate whether it is rural or whether it is urban or whether it is based on occupation. It is very localized phenomena. Say, for example, if there is a temple economy in certain places where the temples were closed till very recently and they are again being closed, the whole economy surrounding that has suffered. So it has nothing to do with the state as such, as a whole. But so these are localized things and very difficult to dissect into neat categories of rural or urban or this occupation or that occupation. But at the same time, on the states, if you have to see, the one state which comes to my mention is Assam, where the recoveries have dipped quite alarmingly. And that is due to the other factors which you are aware of, due to the proposed microfinance bill or act, which is being talked about by the government, by the local state government. And that has nothing to do with COVID. And other than Assam, I do not see any state as an outlier in terms of all India recovery. There might be plus minus 2%, 3% from 93. Some states might be 88%, some might be 95%. But overall, the trend continues to be healthy and improving.
Okay. And Mr. Kumar, we were talking about the difference that we've seen in terms of customer behavior as well. But are you seeing the income levels as well of customers being badly hit? Do you see the need to continue to lend to the customers in order to avert a default?
The income of the customers are impacted to certain segments, as Dr. told right now. A customer related to an ecosystem, which may be a pilgrimage, which may be a travel, tourism, transportation, infra hubs, where for example, IT hub, where the economy where microfinance guys are dependent are not working. Similarly, maybe beauty parlors, maybe hairdressing salons may not be working. So to that extent, there's an income shortage for them because they are not in, even though some of them are essential, but that ecosystem is not working. So, which is what we witnessed in the earlier entire last 1 year. So we saw about 8 to 10% of such claims have delayed. That is what the overall delinquency we witnessed there. So other than that, 80-90% of them are in a normal situation. They are always producing and selling, and their economy is not impacted. And they're quite resilient. Actually, the moment that come back, the normalcy, they will activate and they start paying back. So these are the segment of businesses which some of them are not able to come back. That is where you are seeing 5, 6, 7% of delinquency in the system, in the entire industry. And I think that is where it will stop. Maybe even the COVID 2.0 right now, what is happening, so might impact similar customer again to some extent, because where they cannot do their activity, the footfalls are low for them. So to that extent, we need to recognize that fact. So we are aware of that. That is where we have high connectivity. Where there's a need, we will be, as an industry, we are supporting them also wherever there's a need. Other than that, normal cycle where customer completes the cycle, she wants new loan, there's activity going on. So microfinance keep on dispersing money. I think we must disperse the money because there's a cycle, there's a chain. We need to keep working and helping them. So if customers are good, their business is running, the center is paying, the customer is paying, I don't think there is the restriction for us to go and lend to them. So demand is there for them. So the renewals are happening.
Right. Alok, is the MFI industry, though, the business model per se, would you think it's sustainable? And do you think MFIs will be able to withstand the stress currently in the system? Will there be need for more capital raising for some of the MFIs at least?
Yeah. So you have two questions. Your questions has two parts. One is sustainability and one is raising of capital. So on the sustainability part, I would only say to you that in the financial sector, If microfinance industry is not sustainable, then none of the business is sustainable. As Udayji was telling that they are all involved in essential services, and year on year, because it sometimes as a development professional, it pains me that for 20 years the industry and the clients have proved their resilience time and again, giving you 97%, 98% recovery, and still this question is thrown back to us. So I think as an industry, industry is sustainable only because of its clients. It's not because of some special things in the industry per se. It is because of the clients. So they are very resilient, and I am 100% sure that we will come out even with this crisis with sustainability. On the second part of your capital raise, yes. If the credit losses exceed the normal provisionings of 1% or less than that, to go to 5% or 7%, yes. Those institutions in the middle part of it who don't have much of a capital buffer, they will require to raise capital. And I'm happy that over a period of last 6 months, if I see, many such institutions have raised capital. So capital raising, yes, in case of institutions who do not have ready capital buffer, in excess of the prescribed regulatory capital of 15%, if somebody is just borderline because of the higher provisioning this year, they will require capital. But on sustainability, I have no two doubts.
Sure. Uday, if I could, extend that question about sustainabilities of MFIs with you. There have been many different views on sustainability of the MFI industry per se. What's your own view in terms of, say, the next 5 years for the industry growth, and at what rate do you think the industry can grow?
See, the potential is quite large in this industry. If you see, even 20 years of microfinance existence in this country, I think industry could reach only up to 6 crores of households, which is quite low. As per me, it is only 1/3 of the potential. Despite banks, NBFC, MFIs, NBFCs, SFBs, all are lending into system. So still we reach only 1/3 of the potential business. So which means 2/3 is still out there. So which only gives the advantage for this industry to grow further. At least for the next 5 years, if you ask me, my expectation is that we should grow between 20 to 20%, 25% CAGR as an industry. So I don't have any doubt about it. Maybe it's 2021 is not equal to that, or even 21, 22 may not be the same, subject to how long this COVID wave 2 might impact. But in a normal business environment, this industry should grow between 20-25 CAGR for the next 5 years.
Okay, great to have you both on the show and help us understand where exactly is the growth for the MFI industry headed. On that note, we're going to take a very quick break with news that we're still pretty much struggling at the lows of the day. That opening gap hasn't seen any recovery meaningful at that really come by. We're still lower by 350 points, 2.5% down. Lalpat Labs, Mindtree, Apollo Hospitals, Cummins and Dr. Reddy's are seeing some greens. But besides that, it's banks and financials which are really taking it on the chin. AU Bank, RBL, IDFC First, Canara Bank, Indiabulls Housing, SBI, L&T Finance, PNB, these are your big losers as we speak right now. We'll take a very quick break, but come right back. Lots more lined up on the other side.